Yo, what's going on, ladies and gentlemen? I'm not a financial advisor. This is not financial advice. If you want to watch me live stream every single day, click the WAP link in the description. It's $35 a month. I'm probably gonna raise it to $50 in December, and yeah, because I want a little more serious people to be in my group. But again, I live stream every day. I live teach every day. It's not signals. Okay, try not to make it signals. But if you really want to learn how to trade, strongly recommend joining that. Other thing is, if the last day for the 90% 8-pack sale ends tonight, okay, I literally somehow accidentally bought an account the other day, and I just passed it in one day today on stream. So, I mean, got another free PA account for basically really low cost. So, make sure to click the Apex link, use my code for the 90% off. So, this has been a long-awaited video. Okay, so I'm going to show you guys how I scalp back to get green. Okay, and this is only going to work if you do not play like 1 or 2 micros. Okay, you need to play at least 5 or micros or minis if you want to do this method. Okay, well, why? Because what I do is this. So all I do is I look for like an unfilled fair value gap to be created, such as this one. So in replay mode, let's say I'm red for the day at this point. Okay, and I'm trying to get back green. I'll look for like a fair value gap to created, such as this one. And then I'll wait to the next candle, the forum, to confirm this is going to be a fair value gap. And then what I do, I start shorting a bunch of micros. I short here, so I'll like short here. I'll short like a couple here. And this is why you have to do it with micros, and why if your normal sizing is like 2 or 3 micros, you can't do this method. Because if you're sizing at least 5 micros or many, this shouldn't disrupt your sizing at all. But this, you should be going like a fourth or half the size, especially when you're red. So if your normal size is 1 mini, this would make sense for you. But basically the method is, I'm not looking to the left. I'm buying a couple micros here, a couple micros here when I see a 15-minute fair value gap created or something, or even a 5-minute. It just, again, this one lines up with a 15-minute, and what I do is I keep averaging down, and I know this sounds really dumb, but again, if you're sizing 1 mini and you take a micro here, and then another micro short here, that's not that much size if you think about it. And the reason I do it is because 99% of the time we always retrace to the unfilled fair value gap. Okay, and I know half of you guys are gonna think this sounds stupid, and it does sound stupid for you guys who are normal sizing like 3 micros, because this would just be another full trade. But this is a way to size down, and you could average down, and eventually you usually start retracing to these fair value gaps, okay? Like, and you can average down here, average down here, average down here a couple times, okay? And then eventually what I would do is I start to cover when we hit the next fair value gap. So let's say I short some right here, and I see this right here, okay? So I short a couple micros here, short a couple micros here. You can look for the left. You can look to the left of the chart for confluence. Look at, so maybe you do see a fair value gap to the left. So maybe that would be smarter. I don't think it matters that much, but maybe you do look to the left of the chart and there isn't a confluence that, okay, we are in a fair value gap. I'm going to start buying micros here. I know we're probably going to at least retrace to this fair value gap. So you start sizing in a couple micros, get a couple micros, you get a couple more here. And then your first target for half that position is the newest fair value gap created. So it would be this one. And then you'd hold the rest of this one. Okay, and your goal is not to short to sell side liquidity. Your goal is to short the retracement we get to this fair value gap, because 99% of the time, you're going to get that. Okay, right? So what about this? Can you do anything in this situation? No, because you don't know if we're going to go back up the buy side or what. The only thing you know is if we have 3 candles and we're pumping and there's a fair value gap beneath, we're going to reject and hit this at some point. We're not going to. And if we do get another green candle, it's fine, because you have more room to size in and average down a little bit, right? So this method is very good if you do size like 1 mini or above, because you can get a couple micros and it's not going to be that much of a loss. But it's going to be a way to scalp your back green little by little. If you really you start seeing a bunch of green candles, fair value gaps left open, and you can start averaging down and shorting a bunch of micros back to those fair value gaps. So I do this a lot. If I'm ever red, I'll do that, and I'll just get back green for the day. Even right here, look right here, you can see, okay, we hit high day. I'm just gonna buy a few micros and target this fair value gap right here that was unbalanced, or that was not balanced. Look, you just start buying a few here, maybe buy a few here, put limits up here. We never even hit this. all you're targeting is this because you don't know if we're going to go back to the sell side, but you figured that we should go back to at least this because market moves from inefficiency to inefficiency. And you can see it does go lower, and it does go lower here, but by that time, you don't care. You're scalping your way. You're red for the day. All you want is this because it has such a high win rate of retracing to. So same thing if we look at like Euro right now. Okay, if you look at Euro, there's a giant daily fair value gap here. Okay. Now, when this daily candle closed, or you can even see when this 4-hour candle closed, we had an unbalanced fair value gap down here. What is the market going to want to do? Probably it's going to want to go back to this unbalanced fair value gap. So you could start shorting a few here, start shorting a few here, and you could even, and you have to size light enough to where it's not going to bother you if you go up to like here, because eventually we will retrace down here. Okay, now the only exception to when you should not do this is if we were delivering from a BPR. Okay, so let me see if I can find an example. Like, see, this was filled, so that's not an example. Let's just use this as an example, actually. So let's pretend these wicks did not wick in here, okay? Even though they did, just pretend they didn't. Dude, if you, this is not a spot you want to retrace, because if we're delivering from a fair value gap and we frame another fair value gap, sometimes these are breakaway gaps. These are the only ones I would never try to short because these won't hit. The only ones I think it's good to short and long for scalping back is when they're really high or really low, because eventually we'll usually start to retrace up a little bit, and that's how you can scalp your way back. This, we're delivering from a fair value gap, so this does not need to be hit. This, we're not delivering from anywhere. We're just really high, and we have an unbalanced fair value gap below us, so it would make more sense for us to retrace here. But it doesn't make sense for us to retrace here because we already hit this fair value gap here. So hopefully that makes sense. Again, I do this a lot on my own, and it's an easy way to scalp back green. Again, make sure you're not doing it if your normal position sizing is like 4 micros or less. This will not work for you because this is basically going to be you revenge trading into a whole new trade. Your normal position size has to be at least a mini, and this is probably not going to work on like a 25K count, but like on a 50K, 100K, this is going to be a good method to scalp your way back green, in my opinion. So just don't size too heavy after the first candle. Just take like a couple micros after this close. And if we do have another close, maybe take a couple more. And again, make sure you're going to need practice with it. And I strongly recommend trying this in demo first just to get a feel for it. But yeah, I know this is not really a video that I wanted to make because it's something that I do. It's not something that ICT taught or whatever, but you can almost always expect a retracement back into the range or back into a fair value gap. And that's what I've picked up over the years. So it's like, it works for me. It might not work for you, but just be smart about it. Make sure you're not trying to short back to a fair value gap like this when you know we're delivering from somewhere. Okay, make sure we're really low or really high. Okay, maybe look to the left of the chart for confluence, such as or to the left here, we had a fair value gap. But yeah, let me know if you have any questions about this. I really haven't talked about this before too much, but yeah, peace out.